The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And the same number, of course, 877-927-6648 that you're calling for the other shows. And, of course, today we had John, Steve, we had Tom, we had Daryl. There's just great programming. I hope that I can add to it. And, of course, we got programming all day. And what's better than seeing the market up after the jobs report was positive? You've got the Dow up 35 at 17,920s, having gone into the 17,900s. To me is a big comfort. It says there's not much of a leap now in trying to get to that 18,104 level for leg D in the weekly chart. The S&P would have to go to 2,088.75. That's the E-minis. And the S&P itself, SPX.X, would have to go to 2,093.56. That's another 27 points away. That's a lot of points. But you know what? Possible. But let's do the numbers right away, and then we'll get to the nitty-gritties. Dow's up 34 at 17,919. S&P is up 6, almost 7 at 2,089. The comp index is up 14 at 4,779. What I'd say to my subscribers this morning, well, first of all, I give a very detailed report on the relationship of what you'd be looking for using the VIX index. It says here over 17.40s market slides, under 16.50s market pushes higher, and we've had a nice push to the upside, and the low in the VIX was down at 1606. So that's that little quintile over there. And on the right, the left top part, I've got the 120-minute chart of the Dow in leg B. I can't believe it's still in leg B, which says it should go, based on the Chapman Wave methodology, to at least a peak C and then a D. And the trend is not telling us very much there at 0.69. And the daily chart, let me squash this a little bit. Oops, the wrong one. Squash this one a little bit. And then you'll see the relationship of slightly lower lows and slightly lower highs, but now we're reversing it, making higher highs, and that's very important because what we're looking for is a test of the 18,103 in the Dow, test of the 2,093. Is that correct? Yeah, 93.55 high of the S&P at some point, maybe next week. And let's get out of that. I want to show you just this particular chart here. What I'd also said to my subscribers is that, to my opening call, is that if there's a powerful move that matches the October the 15th rally or the December the 16th rally, then we should be going to new all-time highs. We have already surpassed the kind of move that was made from the 17,262 low on the 6th of January that failed after a couple of big up sessions. And the same thing with the 16th of January at the 17,243 level. So far, everything about this matches. And what I'd say that I suspect that the upside's kind of limited today, that we get maybe a kind of a doji candle at the close, give back some of the earlier gains, but we'll be holding support nicely. And then that leaves next week as the week where we either start to make a peak A and then a leg B. That'll be very positive. Or if there's just sales right up, keeps going like it has on other occasions, that'll also be good. A close below 17,000 at this point, 620 to 17,580 would be very, very negative. I shouldn't have said very, very negative. I should have said would have been the suggestion that the trading range has continued without going to the new highs and that we're going to just be stuck in a fairly narrow trading range. A negative would be a close below a decisive close below that 9-period moving average of 17,649. Yeah, I suppose it would be very negative. Meantime, back at the range, we're at 80% in the stochastic. That's really good. I've been waiting for that. And the MACD is positive, and the histogram is very positive. So that's that. Now let's continue. The Qs, 1, 2, 3. 1, 2, 3, you got the Qs. The Qs have not broken out yet. They really need 104.30s to 104.50s. Really need to take out decisively the high of the 23rd of January of 104.58. That's really important in this particular period. Why? Look how many times. 1, 2, 3, 4, 5, 6, 7, 8. 8 times, 8 weeks out of something like 13, 8 weeks out of, no, something like 11 weeks. You've been repelled at that trend line, that dash trend line resistance. So it's going to be really important. It'd be a lovely surprise to me if today the market actually pushes higher and the Dow closes up 90, S&P closes up 9, and the Qs start to break into the 104.60s area, because that'll be a break of that downtrend weekly resistance. And wait a minute, this is still leg CD, it's leg D in the 120-minute chart. Yeah, we're getting a little close to some kind of strong resistance. We'll see what happens here. Okay, let's go on now. Gold. We got stopped out from our opening call. We had a position in not the GLD, but the equivalent of the GLD. We got stopped out for a very small. Actually, I thought it was a break-even trade. Turned out to be a 4-cent gain. Nothing. It's just like a break-even trade. I'm a little upset because I still see, even with gold down $32 at $12.30 right now, breaking all levels of support. I discussed it when I did Tom's show yesterday, that the level of support initially is $12.53 in the 200-period moving average of the daily, but I thought that might be pierced because we'd be looking at 12, I think it was 12.42 at the time, 1242 in the 9-period exponential moving average weekly support. Well, we've gone right through that. And one of the things that I've been discussing for so long is that these chart patterns are fractals of human nature. There's certain patterns that repeat over and over, and they can repeat in any time frame. And one of the biggest concern I had was that even though the weekly chart was showing strength, and the MACD even now at 84% is still showing strength, and the MACD is still showing strength at positive, and the stochastic still at 84%, and that's kind of good. But price is the arbiter of a trend. And if the price is breaking down like this with a kind of A pattern, single leg A up, and then powerful move down, happens to be a peak C. But when it does that, I have to consider that you've got something here that resembles the pattern that I call the, it's the Chapman wave falling axe, but the inverted falling axe. And I really must look at this and say, hey, be careful, because if the gold in the next week starts to take out, and I said that on the show yesterday, that if gold takes out the 12,039.35 area, that's really not a good sign. And one of the big reasons for it is that if you were looking at the GLD, that GLD is still in the H weekly chart pattern of H. Let me expand this. The H that goes to a lowercase m that breaks the low and then has to have a powerful move taking out all the left side peaks. Well, the left side peak of significance in the GLD, the Spider Gold Trust series, is at 126.81. We went to 125.58. We didn't take it out. And that's very important. So this arch pattern that's forming now in the weekly chart says to me, hey, be very careful. You put in a pretty tight stop and you held the position for weeks, but it didn't break out to the upside. Instead, you got taken out to the downside. So be very careful. So that's gold. If you look at the TLT, and of course we had gold going up, dollar going up, bonds going up, all of a sudden they start to be coming down here, got a very sharp move in the TLT, down 1.97%. We haven't seen that on the downside for a very long time. I've got this as peak E in the weekly TLT, Lehman 20-year T-bond fund. But wait a minute, I've got it as a peak F possibly in the weekly chart of the bond continuous contract That's not the issue, really. This is the issue. I've got it in a potential peak E in the weekly. The last peak E was had a long time. It went 1, 2, 3. Wow! It went from a high, all-time high in July of 2012, down to the low in August, September of 2013. So this is a very quick and not very strong monthly chart going from a trough D to a peak E. I got to watch this real closely. The stochastic's good in the monthly at 88%. The MACD is still good. The weekly chart is still holding at 86%. This is a tremendous move in bonds. And I have to tell you that for many other reasons, I'm looking at this and I'm saying, okay, money coming out. I spoke about this, I mentioned it in my opening call about 3-4 days ago. I said, money coming out from the bonds going into equities. I think that's what's happening here. So we're going to be watching this very closely. Why? Because if bonds at 147 start to break into the 145, 144 area, 142 is major support, but at this particular point, it's still 5 points, 5, 6, 7 points higher than that. So let's just say that at 147, if we continue in this pattern, and the market holds, the Fed is in a very good position. Why? Look at the TBT. The TBT is in a very strong leg A to the upside, almost made a B, but it's still a leg A to the upside, having gone from 38.15 to 42.53. That's a huge percentage move for the ultra short Lehman 20-year T-bond Treasury fund. That's amazing. And you remember I made quite a big deal. Oh, I don't think I've got it. Of the yields, the 30-year yield going to that all-time low, but the 10 and the 5-year, we're not doing that. Maybe just now I'll switch charts and we'll go there. So that's there. And now look at the dollar, DXY. The dollar is holding well. Now there's a divergence. Bonds are pulling back really sharply. Gold is pulling back really sharply. Dollar is holding up. Why? Because in the world of USD, in the world of currencies, it's not the local yokels that are playing the game. It is countries that are playing the game. And they still see the euro, I believe from the chart, that the euro is still weak and that the dollar is still strong. And if that's the case, what we should be seeing here is that instead of plunging into the 92 to 91 area, the dollar's at 94.48 in that rectangle formation I drew some time ago, a little flag kind of pattern. And what's really important about this is that the weekly is still technically very strong, even though we've made a peak D, and that incredible single leg up in the dollar monthly chart that we've just seen going from June, I think, of last year, May of last year at 78.91 has screamed to the 90. What is the high that we made here? 95.48. Let me type that in. 95.48. Wow, that is an incredible move in a single leg. Amazing. It's a currency with the backing of countries. They have oodles of boodle, so that's different. All right, I'll talk about my upcoming webinar. I'll put it right here as we go out to a break. And you will see that we have a webinar coming up, and I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. During the break, I had a question here about my white background chart that shows the 7-year cycle, etc. Technical Friday today. And I'm showing the 7-year cycle means that at 2007, 7 years from that, comes to 2014. Well, this is 2015. Sometimes they expanded by a year, maybe even a little more than a year, or contract by about a year, but it's approximately a 7-year cycle. So let me do this. I'll try to talk a little bit about this a little later on, but most importantly, I just want to mention, go to the front page of TFNN, because 2 weeks from last night, on the 19th of February, I'm going to be giving a webinar, 1-hour webinar on the 1929 market, and then and now. Everything from these tickers, from the bubble, that glass bubble ticker tape that came along in late 928 and 29, to what we see in the modern way of trading, what's happening. I'm going to talk about automobiles, clothes, all sorts of things that relate to the excessivity. I call it the excessivity of the markets. We haven't really got to that point yet in the socioeconomic spectrum. We're getting there, but we aren't there yet. So let me just do this. I want to move this chart away for a moment. Okay, get it out the way. I can talk about it maybe a little later or sometime over the next week or so. I want to go out of this. That's the front page. So all you have to do is you sign up for a free newsletter webinar. You get a free newsletter for a month. It really is free. You don't have to pay for that, and you can just check out all the details on the front page of TFNN. But that's the only way. It's for subscribers. So you need to really be a subscriber to be able to join in. Now, why am I not getting my charts all of a sudden? There's that one. There's that one. Hey, what happened to my chart? Uh-oh. Oh, that was the whole thing. Oh, that was silly. Let me go back, open it up, and let me go to that there. Oh, there it is. Good. Woo. That was a mistake. Okay, so now with that in mind, I'm going to go to our first caller. We've got Garo in Newport Beach, and Garo would like to look at. Hi, Garo. How are you?
Very good, and you, sir?
I'm well, thank you.
Right. I'm looking at Apple. I'm checking and checking over and over. I cannot find any flaw, daily chart or weekly chart or monthly chart, and this guy doesn't move at all. With being $120, doesn't move. I yesterday I bought it for 400 shares at $190, and I want to keep it for a while. Do you advise that? Do you recommend that, or you think again it's gonna pull back?
Wow, Garo, you don't usually buy and hold. You buy and you're out.
Yeah, I couldn't find any flaw. That's what Yeah.
Let me just go through a couple of things. It's so ironic that when we change our modus operandi, that's usually when we put ourselves at the greatest risk. On that one time, we just don't do things the normal way. Let me explain what I'm looking at. I happen to agree with you that there aren't any real flaws because I'm looking at the daily. Yesterday, it made a peak D, and the Chapman wave peak D is the fourth highest peak. Oh, I wonder if I can go there. I need to show this. I found people are telling me that it's really good to be able to put the relationship. Now, if I can only find it, I just clicked. There it is. Now, here's the chart that I wanted. Let me just move around a little bit so I can get to that chart. This is the chart. Okay. So my methodology at its core is a very simple one. You find the most identifiable lowest low bar, and you merely count each successively higher peak. Peak A, 1 penny above A starts leg B. If it turns around, makes a V-shaped top, you've got yourself, even if it's by 1 penny, that makes a peak B in this case. 1 penny above B starts leg C, etc., and goes to a D. D is where you've got to be somewhat careful because it could take time, it could take price, it could take both to consolidate, or it could recycle higher. But that's the objective, is to get you to D, and then other things can happen. So here we are. We're at peak D. But the stochastic's at 93%. I mean, if ever you want a positive representative of the stock, you want to see the stochastic holding in the mid-90s. That is tremendous action. So that's very positive. The MACD is still expanding. The histogram is still expanding. So the daily might be at peak D. It's got tremendous support at 117.68 to 116.20, but so far, not a flaw, other than to say it's in that leg D that we usually talk about as being the one that you got to be careful. That's number one. Number two is the daily has led the 120-minute chart to a peak D as well. Oh, we've got a break coming up. So here we are at peak D, but it's walking the 9-period moving average. Absolutely nothing wrong. And then I'm going to go to
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. And what's really important about this is I'm looking at Apple with Garo. We're looking at Apple to see if this is the first time that Garo can actually hold, because everything about Apple is pointing towards at least slightly higher prices. Now, let me just explain two things. One is, I had mentioned this yesterday and the day before. Apple, like Disney, is the kind of stock that fund managers have no choice but to be buying right now, because they're the leaders of the pack. They're making all-time highs. They've done everything right. The earnings, everything is good. At some point, they will pull back and they will fill their gaps. Apple will fill the gap between 115.31 and 112. So that's a 3-point gap. It will fill it because it's closer to highs than lows. Lows don't have to be filled for years, but at highs, that becomes a focal point. Just like if it was a candle or a moving average on the downside, it becomes a focal point. So this is now what I'm going to suggest to you. Because it would be the first time in quite some time that you'd be buying and holding for more than a couple of days, and I've got it at D in the daily. I've got it at D in the 120-minute chart. My way of doing it would be, say, a risk reward would suggest that even though I'd be looking at 2 to 3 points higher, there is a chance that it could give back a very quick 2 points if there is a sudden market downturn, just because of the nervousness. The fact that bonds have pulled back. We were just discussing this in the den moments ago during the break. The TLT has given back a huge amount in the shortest period of time. Not that it hasn't been moving up in the same way, but it hasn't given back. This is the first time that it's done that. So you can see that it's sitting right at the 200-period moving average, having made a peak F-top in both the daily and the 120-minute chart of the TLT. So these things, we're moving now kind of quickly in certain areas, and we could give back quite a bit. I'm expecting that today most of the gains will be given back by the end of the day, but there's still a lot of support. So Apple's holding very well at 120.08 at up 13 cents. This is the way I would look at it. You could start a small position now as an experiment in holding and not taking profits very quickly. This would be a case of holding through maybe Tuesday or Wednesday. Now, if that's the case, that's the reason why I say just a small position, because the real position I would want you to be thinking of is at 120.06. I would prefer 119 to 118.30, preferably towards 118.5, closer to that area than to this 120 area. But at the same time, because it's held so well, any modicum of strength over the next 15 or 16 hours, which that's between now and Monday, even with Sunday night's trading, would suggest that it could have a pop-up without even pulling back, because it's held so well. And you want to be there because this is your concept right now, that it's held this well. Maybe this is the time that you want to hold it a little longer. Now, 2-3 days ago, that would have been the case. Now it's getting a little more difficult, and that's why I'm suggesting have patience. If you miss it, at this point, I think it's about 2-3 points to the upside. It's not such a big deal. But at the same time, the only way I would do it is I would nibble on it right now to get the position, because it's your thinking. But the real position comes in after some kind of a dip later today or maybe Monday. And that's the position that you want to have. And I would still say to you that I would put in a stop. I would treat it just like any other position and have a stop. And my thinking here is that if Apple is able to get to 120.82 to maybe 121.32, somewhere in that range, and hold, it could have a very quick 1.5 to 2 point pop-up, and then I suspect it's going to take a bit of a breather. So I'm looking at the 121 to 122 areas, very strong resistance just on the very short term for Apple, but I would prefer to see some kind of a digestive day and a half to 2 days, or even one quick move down to the 117.67 9-period moving average. Wow, that would be good, because if it holds well after that, and the stochastic's still at 91% or 92%, now you've got yourself a really nice trade, because you've got yourself potential for 4 to 5 points rather than maybe 2 to 3. So
yes. But I have 400 shares. I bought it yesterday at 119. Should I get rid of 200 and keep to 200, or should I keep all 400?
I've got to leave it. I forgot. That's exactly what you told me. That's even better, and I'll tell you why. Hold 119 and have a stop on half. So a stop on 200 of about 119 points. Tell you right now, 119.80. That's just 30 cents. If Apple's going to give it up, it'll give it up quickly. But you know what? Use it as a trading stop, because if Apple's still showing strength at the end of the day, it'll take out that leg D and go to a leg E. And now what you've got is you've got a little bit of extra cushion for Monday, if Monday gaps down or whatever happens to Monday.
Yes.
Okay. Now, here's another thing. You could take 100 off and say, you know what? I'm fine. I've taken profits. I've got that 100 that I could put back if there's a pullback. So don't have to do it exactly this minute, but think it through. I'm just saying that you're in at 119. I would keep that. I'd use maybe a 1-point stop. I don't know if that's the way you would do it, or you'd get out right at your entry price, but I would have it maybe a 1 point to 1.5 point stop, because there's a good chance that Apple will go to higher prices by Tuesday or Wednesday of next week.
Very good. Very good. Excellent. Excellent. Thank you, sir. Thank you for your time.
Thank you very much for calling. Have a great weekend, Garo.
You too, sir. Thank you. Thank you.
Thank you. So, folks, and now this is a D, and D is where you can have an even deeper pullback. But what I am looking at here is that Apple, at least for just another day or two, has got buyer's remorse. No, you've got seller's remorse, and that it should give people some breathing room if they are long, because it just keeps holding so well. And if it does pull back, then that I said 118 would be a stop for me on the Garo's position, bought at 119 something or 119. So 1 point is really not a big deal for this experiment, because usually he goes in and within 3 hours or so he's out. Okay, let's go on to something that I wanted to talk about. And this is going to be very important. This is going to be part of the discussion that I have in 2 weeks' time in the webinar for subscribers. And there's a way to be able to join in and listen to the webinar. And you go to the front page and you'll be able to sign up. But most importantly, the question, and I'm going to discuss this is an open question. It's not like it's a secret or anything. I've discussed this for years and years. In fact, in the 1980s, I wrote a paper. It's actually part of a chapter in a book. I had to take some of this out for the book, for the chapter itself, but it was part of my thesis that I had written, that General Motors would one day, and Cadillac would one day, become the premier American auto company, and the pink Cadillac would be back as the fancy car to own. And that was when General Motors in the 1980s was making plastic parts. I mean, it was the most absolutely pathetic. When I hear Smith and all these guys being interviewed with their great books and everything, the guys that were fired as CEOs, I just want to, I get so mad. They were the ones that drove GM into the grounded them into the dust. And I'm going to go off on a tangent here. But my big complaint was the unions. The automobile, the unions, what the heck? How could they let their workers work for such bad companies? It's their fault as well as everyone else, that the directors of General Motors, Ford, and Chrysler. It's just pathetic. I mean, any fool could see that the cars were made out of junk. They used plastic parts for the engine in the 1980s. So, well, every month or two, I get this catharsis. I get this out of I don't get it out of my system. It's still there. In fact, I'm still complaining, even though we're along General Motors in my newsletter. I'm still complaining that the quality. It's taken 4 or 5 years of talking about this, and they still aren't better than Lexus. They should be better than Lexus. Why not? And you can do mass production. The Toyota's been doing mass production with fabulous quality. Honda's been doing mass production with great quality. You can do it. And the unions, the guys, they should be yelling and screaming and saying, what is this with Ford and their infotainment system that is the most pathetic on earth? I suppose it's improved, but that's unacceptable. You don't put it out there. This is not the old days of high tech. You put it out and then you make your changes. Things like that are simple. You ask a fool like me to say, hey, test this out. Can you make it work? If you can make it work, we're putting it in our cars. That's the way it should be. All right, let's get back. So anyway, General Motors finally acting much, much better. It hasn't made this leg D in the 120-minute chart above 3660. I think it will. Is this leg D in the weekly, in the daily, or is it a brand new leg A? Doesn't matter. We don't have to think about it right now. We will have to think about it when GM has this bit of a pullback, starts at test 35, 34 level. But in the meantime, the weekly, the monthly, the daily are all looking very good. But the monthly is the chart that I wanted to talk about. Of course, this is the new General Motors. The General Motors that was in the Dow for decades and decades and decades is no longer there. And what I'm looking at here is a brand new company, but it's really just a brand new chart. It's the old company and the old thinking. This lady who keeps coming up with the we're going to fix. She was there for 15, 20 years. She was part of the problem. Getting that out my system. So we need new thinking there. It is coming. It's slow. And the Buick is getting great reviews. I sat in the Buick, second year that I've sat in the Buick, and said, wow, the seats are almost as good. Actually, out of all the cars, the Volvo has always had the best seats at the show when I go to the show every year here in Boston. And the Lexus has pretty close to the next best seats. And all of a sudden, Buick is starting to get there. I don't know about the Oldsmobile. I had an Oldsmobile once upon a time. I got it. I always get cars secondhand because I'm not prepared to pay that kind of money for a deaccelerating commodity as you go out the showroom. What is that? So anyway, in fact, that Oldsmobile, it was an old Sierra, and it was front-wheel drive. It had a bench seat, so that was really good for carpooling and everything. And what was really important about it is that it was the right size. It did everything really well, except it had plastic parts and it was junk. But the design, everything, they were on the right track. And if they really molded that and got that designed well, I can tell you right now that design could have been changed. The pattern was exactly right. They could have made the modifications as the years went by. So, okay, General Motors. We're looking at General Motors, and to break out, it really needs to get clear above 41.85. It needs to get to the 42, 43 area by the spring or the summer. Can it do that? That's the big thing. I'll tell you why it's a big thing. Because if the auto companies, the United States auto companies, we've got callers on the line. We'll go to our callers first. Lou in Nashua, how are you?
Fine. How are you, Basil?
I'm well, thank you.
I was wondering if you could look at the euro.
Ah, that's what it was. EU. If you don't mind, I'm going to go to the EUR-USD currency pair. Is that what you would trade?
It's the futures, actually.
Right. Okay. So you'd go to the futures, the EUH?
I don't know what the symbol is.
Okay. Let me just look at it. No, it's not. Oh, it's EC. I bet it's ECH. Yes, it is. Okay. So we're looking at the ECH at 1.1347, and that is the March future. You know, I have a big... You want to go long? Is that... You want to go long? You want to go short?
I was thinking of going short.
Ah, okay. So the short pattern says that there would be an H formation. One of the problems is now, what is it? Do you remember what is a trade per tick? Oh, what is the price? Is it trade in 5 cents? What increments does it trade in?
I think it's 5.
Okay. So what I'd be looking at here is that even though EUR, let me see if I've got this EUR-USD. Yes, I've got this notated already, and that went to a D. So that's B, and that is D. CD. Okay, so it's gone to the D right there, and that pulls back and it makes the arch formation. One of the problems with the euro at this particular point is that I think that the dollar is holding well, but I'm not sure whether the dollar is going to break out at this particular point to another new high or whether it's just stuck in this trading range. And I'm thinking, at least for the next 2 to 3 sessions, we might be stuck in a trading pattern that has the dollar going maybe to, I don't think it's going to break to a new high just yet, above 95.48. Wow, it's not very far away. But I just think it's stuck in this trading band, and that the euro is stuck in a trading band. And until they can really break out of the patterns, euro needs to break upside above 1.52, I would say, 1.54.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back in in Nashua, New Hampshire. We're looking at the Euro EUR USD. It parallels very much the same pattern as the ECH15. Let me just double check. Right. Oops, I typed it in the wrong place. ECH15. You know, Lou, my biggest issue here with the short side is that it's very close to support. And I just don't know how many, so pips, let's see, so if it goes all the way to, I suppose it could be a lot in points if it goes down to 1.128 from the 1.134 area, but I feel more comfortable giving you advice. Once it hit that 200 period moving average, I could have said to you, hey, if it starts to break under the 9 EMA, it could pull back quite sharply. But now it's closer to some support, and I think that the dollar it's a little tough, but the dollar has these big spikes off the 200 period moving average and then stalls out. and each one has gone ABC. Even the dollar has gone back to ABCD. I think that Sunday night's going to give us a lot of information. So I'm going to have to say to you, my bias is to say that the euro still needs a lot of work to be able to go much higher. But I think that both the dollar and the euro, just for the next 3 days or so, until a decisive move away from the boundaries are set, I think we're just stuck in a bit of a trading band. So I don't actually see the points that you need. I don't know how you're going to get them if it just stays still. So I think it's trapped in a fairly narrow range, and I'm having difficulty. I would say to you that if it bounces to the ECH, which is the contract that you would be looking at, the March, if it bounces to 1.1417, that area, that's where it's getting close to the 200-period moving average, and it could actually start to move a little higher. But if it breaks underneath the support of just a few of yesterday, I think it was, the 4th. On the 4th, the low was 1.1308. That says it could go down a little bit more. But right now, risk-reward, it's just too close for me to feel comfortable because it's not really in a trend. It's in a bouncing trend. You know what I mean?
I could see that, yes.
So I don't want to give you if this and if that. It gets too complicated. All I'm going to say to you is I can't give you anything with conviction right now. I can see that it's close to support, but at the same time, I see the dollar is holding well, but I don't actually see the dollar breaking out. I think they're both stuck in a trading band, at least for the next couple of days. So that's why I'm going to have to leave it. I'm sorry, Lou.
That's fine. Thank you. I appreciate that.
Thank you very much for calling. So, folks, let's just do this as we're about to wrap up. I hope I don't step over I'm sorry to my engineer, Al. I don't know why I didn't hear. I covered up the timer, and I also didn't hear through the earphone. Maybe I was talking too loud. I don't know. So I apologize for that. Okay. The VIX index. The VIX index right now is at 16.51, down 34 cents. It is trying to find a little bit of a footing here for at least stabilization. But between 15.55 and 14.54 next week, that's going to be the key area. We're going to be watching that really closely. Why? Because if it continues going down, there's a real good chance sometime next week that the Dow could have that big move. The high today was 17,951. All it needs is 160, I think, points, something like 160. That's all it needs to make a new all-time high to get to that leg D. Question in the den was, am I only expecting nominal new highs and then a pullback? And the answer is, I think so. I think a lot of stocks are actually kind of overbought a little bit here. So I would not be surprised if next week we make some kind of a peak in the Dow, and then we pull back, but a minor pullback. Then the following week, 2 weeks' time, you have to wait 2 weeks before we actually make leg D in the S&P. It's going to be very interesting. Go to the front page, check it out. I've got a webinar coming up. See how you can get to it. Have a wonderful week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.